Darkness in Chinese markets, stock slump and economic tension. What is behind the decline? What are the future prospects? What are the worrying signs that are cutting short the rebound in Chinese stocks? What are the possible implications for investors? I'm Michael Justice, and this is the Dollar Talks channel. Welcome to my financial crime investigative news program. Subscribe to the channel and find out all the most shocking financial news. An ominous shadow stretches over Chinese markets. Stocks are experiencing a frightening decline, recording their worst weekly decline since March. What are the reasons behind this negative trend? Let's find out together. A misalignment of expectations that worries investors is cutting short the rebound in Chinese stocks. Analysts point to a number of factors, including the authorities refraining from providing meaningful policy support and an economy that is losing momentum. What does this all mean for investors? Let's find out the background to this disturbing situation. Beijing's modest stimulus discourages investors. Despite some stimulus efforts by the Chinese government, market reactions have been muted. Traders are skeptical that such measures will be able to reinvigorate an economy burdened by record debt levels, slowing global demand and low confidence among businesses and consumers. What are the implications of this lack of confidence, and what are the prospects for the future? The Hang Seng China Enterprises Index of Chinese companies listed in Hong Kong has slumped more than 6% in 4 sessions, crowning its steepest weekly decline since March. The CSI 300 index also fell significantly. What triggered this drop, and what are the implications for investors? Future outlook: rebound or further declines? Predictions about the future of Chinese markets are mixed. While some strategists see a tactical trading window and cheap valuations as an opportunity for investors, others are more cautious and point to the gloomy economic outlook and general pessimism. What is the truth behind these contrasting perspectives? In light of these challenges and uncertainties, what is the best strategy for investors considering the Chinese market? Darkness continues to envelop Chinese markets, but there is still hope for rebound and investment opportunities. However, it is essential to understand the dynamics at play and carefully consider the possible implications for one's investment strategies. The decline in Chinese assets is also a reflection of the structural challenges the country's economy is facing. Pressures from rising debt, political uncertainties, and the slow transformation from export-driven growth to a model based on domestic consumption have contributed to a complex and uncertain economic environment. How are these challenges being addressed, and what are the long-term implications for investors? Investors must remain informed, flexible, and ready to adapt to changing circumstances. Understanding structural challenges, market dynamics, and economic policies can help make informed decisions. Despite the current difficulties, China's markets still offer investment opportunities, but they need to be approached with caution and thorough analysis. I'm Michael Justice, and this is just the beginning of our journey. Subscribe to our channel and turn on notifications by clicking on the bell so you don't miss the next episode, because the answers may be more shocking than you imagine.